Would you leave $10,000 worth of gold sitting on your kitchen bench? Of course not. So why would you leave cryptocurrency in its easiest place for the hackers to take it? In this episode, we're going to do a deep dive into cryptocurrency security and the best practices that are available. First, we'll look into the main ways to store your cryptocurrency, and then we'll break down the lowest levels of security versus the highest levels of security. You see, the problem is no one ever thinks the worst is going to happen to them until it does. That's why so many people fall victim to hackers or seizures that could have been easily avoided. But if you start with good practices and strong foundations, then maintaining a high level of security becomes a breeze. By the end of this video, you're going to have a very clear understanding of the different ways that you can store your cryptocurrency. You'll understand the degrees of security, the best practices, and the different options that are available to you. Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it. First, let's take a look at two main ways you can store your cryptocurrency. Before we do that, I want to quickly make you aware of a free knowledge center that we've built on the Imperial Wealth website. You can access this from the imperialwealth.com knowledge center. It's in the menu bar on our home website. And there's so much that you can learn here. Key terms such as exchanges, wallets, and so much more. Our team has put together all of this educational content for you, and it's free. So make sure you go and check it out by clicking the link in the description below. All right, so let's start off by looking at exchanges, which is really the most unsecure way to store your cryptocurrency, but it's where people usually start. Unfortunately, because of its convenience and the limited user responsibility, many people get stuck on cryptocurrency exchanges. So what is a centralized exchange? Basically, a centralized exchange is similar to your bank account. You would upload your money onto there and potentially you could swap in a bank account AUD, USD. Well, the same thing happens on a centralized exchange. You put Australian dollars on there and you can buy a bit of Bitcoin, Ethereum, whatever you need. Now, the advantages of this is there's no responsibility on you. You don't have to worry about having your private keys or your seed phrase safe. You don't have to worry about someone hacking into your wallet, per se, or getting a phishing link, something like that. But the risk is all of the responsibility is on the exchange to keep it safe. And the FTX saga taught us all something that no one can really trust an exchange at the end of the day. FTX was the biggest cryptocurrency exchange available on the market. It was sponsored everywhere. It was the king of the space. Sam Bankman-Fried was very, very well known and respected at the time by most people. However, even FTX went down and a lot of people lost a lot of money. So when should you use a cryptocurrency exchange? Well, of course, when you first start out, it's probably the best place to buy your initial purchase of cryptocurrency. You're going to upload your Australian dollars onto the exchange, maybe buy some Bitcoin, Ethereum, or even some USDT. But you want to get in the habit of withdrawing that cryptocurrency from the exchange and into your own wallet. Now, there's big limitations with the centralized exchanges though, and one of them is you might end up having to set up 1, 2, 3, even 5 exchanges to buy all the coins that you want to. An exchange doesn't necessarily list every single cryptocurrency that's available on the market. I want to give you an example of even some of our clients who were stuck on the comfort zone of being on centralized exchanges. On the morning that we released one of the best tips, Asta, to our Crypto Academy clients, some of them who weren't set up on the decentralized network and who had withdrawn crypto out of the exchanges and into their own wallets couldn't buy the cryptocurrency as quickly. However, those clients who had taken that step and gone and set up on the DeFi network, they were instantly able to connect to the Asta decentralized exchange and purchase the coin. So don't leave yourself in the point of scramble where you need to use DeFi, but you haven't got exposed to it or set up or comfortable with it just yet. Do it from the get-go. The other point is you don't truly own the crypto when it's on an exchange. The old age saying in crypto is, if you don't own the keys, then you don't own the coins. So please make sure you get in good habits from the get-go. Withdraw your crypto from the centralized exchange that you're on and put it onto a wallet, and start small if you need to. So I've mentioned this term wallet, but what actually is a wallet? Well, think of a wallet like a vault or a safe. Some vaults are like the small ones that you get from Bunnings or that you have in a hotel room, and others are like the massive ones you see in commercial banks with huge spinning locks. In crypto, the less secure ones are called soft wallets, and the most secure ones are called hardware wallets, like a Trezor or a Ledger. Software wallets can still be very secure. Plus, your funds are far more liquid. You can make transactions and move quite easily when you're using a software wallet. Hardware wallets, on the other hand, require your physical device to actually take a few more steps to process a transaction. So it can be a bit slower, and you actually have to have that device on you to do the transaction. If you leave it at home and you go interstate and you want to do a transaction, you're going to be stuck. So there's a little bit less liquidity, but a higher level of security. So when should you use a hardware wallet and when should you use the software wallet? Well, personally, and how we train our clients is, if you are planning to hold cryptocurrency long-term, say Bitcoin, and you're not really planning on selling it anytime soon, especially if you just have the mentality, I'm going to hold it for 5 to 10 years, then definitely you want to get that onto a hardware wallet where it's going to be most secure. However, if you are planning to do a little bit of active trading, maybe Asta's a good example. We bought into that coin, but we knew we wanted to be out fairly quickly and take advantage of that initial run. You're not really going to transfer that onto a hardware wallet because you need to have it liquid and ready to trade. Now, I want to get into some of the best practices. The main one that I always encourage to people is to use multiple wallets. Set a limit of how much you can afford to lose and cap the amount that you leave in that wallet. So for example, if for you losing $10,000 is going to have you curled up in a ball and crying, then don't leave $10,000 in a wallet. Maybe spread it to $1,000 in each wallet. However, if you're trading at a larger level and you've got millions or even hundreds of thousands, you don't want to have 100 wallets with $1,000 in each of it. You're probably willing to risk a little bit more in one wallet and therefore put $10,000 in each wallet or 100, whatever's comfortable for you. Now, the other best practice that I really want to highlight is don't be lazy. Leave minimal funds on exchanges. That's definitely a tip that I recommend to everyone. Very rarely will I have more than 10 or 20,000 on an exchange. Honestly, I try to have no money on exchanges. However, sometimes, for whatever reason, I'll have some there because I'm expecting to do a transaction sooner or later. If we're talking in percentages and going back to soft wallets, hardware wallets, and exchanges, I may have a large percentage of my money in the hard wallets because I'm holding Bitcoin and Ethereum, and they make up a large point of my long-term holdings. I then may have 20-30% sitting on software wallets, and I spread it across them. And I might have 10 or 20% of my total holdings on an exchange at any point in time. However, ideally, I will pull that out and put it on the software or hardware wallets where I can. Just quickly, if you're ready to take your results to the next level, my team at Imperial Wealth Crypto can help. Inside our Crypto Academy, you'll get access to my personal portfolio, strategies, real-time market insights, and the exact plays my team and I use to stay ahead. With our team of analysts monitoring the markets 24/7, we've helped investors catch moves like a coin that's done a 5x in 4 days. If you're serious about accelerating your wealth, click the link below to book in a call with my team of experts and see how we can help. Now, back to the episode. Now, probably the most important best practice. Always record your seed phrase. Don't be that person that goes and sets up a soft wallet or a hardware wallet and then loses their computer and they didn't record the seed phrase. Your seed phrase is your master phrase. It's your master password. And if you lose your computer, you'll always be able to get your wallet back with that seed phrase. Now, in terms of how you store that seed phrase, what I like to do is either write it down on a piece of paper and store it in two separate locations. You might have a safe at your office and a safe at home. It's up to you where you store these. Some people dig them into the ground. It's really up to yourself. However, the benefit of having it in two locations is if your house unfortunately burnt down, God forbid, hopefully it doesn't happen, that you won't lose that seed phrase, the computer, and everything, or the only way you had to access your crypto. Another best practice is be diligent with software wallets. Don't connect to platforms you don't understand. And if you're unsure, always seek assurance from a trusted source before proceeding. With our clients, they're able to message into our Discord server and simply ask the question, does what I'm doing look right? If unsure, don't do it at all. Now, the final point, always do a test transaction. This is such an important best practice, and it will save you so much in the long run. A lot of people feel quite nervous when they're first transacting $1,000 to an exchange or to their wallet or paying for something. But the best thing you can possibly do is send $1 or $10. Make sure it lands where you're expecting it to land and then process the further amount of money. Now, even as an expert, I've made mistakes along the way, but don't let that scare you. If you never start, then you'll never take advantage of the opportunity that crypto offers. And let me tell you, I have made substantially more in the cryptocurrency market than the little amount that I've lost from small mistakes. Now, I want to share a story which was probably one of the worst days of my life for a period of time, but it turned out to be a great day in the end. Basically, there was all of this stuff that I was doing on a specific network around the 2020 to 2022 period. And we were promised that we were going to get this airdrop for doing it. But nothing really eventuated, and to be honest, I kind of forgot about what we were doing there. Until I saw on an X post saying that the airdrop had actually happened. And I went to my wallet to check, holy moly, how much have I got? Because everyone was saying it was huge airdrops. We're talking around 10,000 each wallet, and I had 10 to 15 wallets going for this. So I went to go check if it was there. I opened up the wallet and it wasn't there. And I'm going, oh, what have I done? I should have saved the seed phrase somewhere. So I booted up the seed phrase and it still wasn't there. It wasn't working. Basically, what had happened was the first wallet that I had was not the main wallet, and it was the sub wallets that I was using to do all these interactions. And the best part is, at the end of the day, I came back with a fresh, open mind. I looked at it again and I remembered this. I opened up the sub-wallets and there was all of the money that I was promised. But the moral of the story is don't let this happen to you. Make sure that you are very, very diligent with where the seed phrases are kept and make sure you always understand what you're doing. Now, another story that I want to share with you is it's about doing the test transactions. You should always do a test transaction before you send the amount. And there's a few things that can go wrong. One, you may send it to the wrong wallet, or potentially you may send the wrong coin to the wrong network. Just to make clear, you can't send Bitcoin to an Ethereum network, and this is a common mistake people make. I made that mistake once upon a time, but it was a test transaction that I did, so it was only $10 I lost. And that's why it's so important to do the test transaction. This is a whole new world, and it can be very daunting at first. But remember, if you don't start, then you'll never grow. If you never start, you'll never take advantage of what there is out there for you. Imagine trying to run a business today without using the internet, and you're still operating on a fax machine. You're simply not going to be able to keep up with the rest of the market. And honestly, that's how I see the cryptocurrency market evolving. It's like not being on the internet compared to today businesses running on the internet. Hopefully in this episode, you've learned some of the best practices on how to keep your cryptocurrency safe and secure. Hopefully you've also written down some of those really good habits that are going to save you in the long run. And of course, remember to build the foundations from the start. Never rush anything that you're doing. Always check with a community member or someone who's experienced that you can rely on. And of course, do a test transaction and keep it small. Let us know if you've enjoyed this educational content, and also let us know if there's other things that you would like to learn more about. Please subscribe to the channel for more information like this, and share this episode with someone that could benefit from learning how to protect their crypto. Can't wait to see you in the next episode. Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.